Hello, guys. So, our second episode of Borrowed Conviction. This time we also have a special guest, Andy, also known as DaBao, which you know, the guy from Taiwan. And it's actually quite fun because we're having North America, we have Europe, and we have Asia. So where
Yes.
the globe is very well represented, and we should get someone from Africa next time. That would be fun also.
Sure.
Yes, and we briefly discussed here before, and I think we're at the stage in time when everyone is kind of trying to understand what's next for AI trade, and some of us were exposed a little bit more, about a little bit less. I mean, I was also I sold more or less everything, but then I only had this Planoptic stuff, which is anyways the long shot. But then I also I've seen a post on a company that I also owned before, Tasma, which is the semiconductor equipment manufacturer from our friend Nippon Latent Value, and then I bought it back because the orders that they're getting are very very kind of huge. So I also went back, and then I suffered quite a bit of drawdown. So in the end, everyone was exposed probably, and it's important to reflect a little bit and where do we really stand with this AI trade. And maybe Andy, you can first summarize, what do you really think, how exposed were you, and what do you think now? So I think it's just a most important question now.
Okay, so my only exposure is TSMC because I figured that this may be the most safest and most relevant AI trade compared to all other ideas. Because if you go down to rabbit hole, like the semiconductor supply chain is very long, very intricate, very independent, and interdependent as well. And so basically, like a lot of people don't appreciate how complicated it is. So if you want to build a fab, it takes like 4 or 3 years to build it out. And a lot of people, they never experience a full hardware cycle, so they don't know what that's like, and they certainly don't have the experience of a what was called a bullwhip effect. So that means
Right.
that if there's a slight minor change in the end demand, so it trickle down all the way to the top. So you have a very distorted demand at the top, and because just so many steps on this supply chain, it's just impossible to have the correct forecast. So people will have overcapacity at a point. So there's definitely like bubble like at some supply chain. So it's just very complicated, and especially like memories. Okay, so you see what's going on this week, right? So Samsung dropped like 26% and up 28% the next day. So same thing with SK Hynix. So down 30 and probably up 30%. Just and also we have to understand that like a lot of people are on margin and that like leverage ETFs and a lot of formal investors. So they just go through it for the first time. So I would say like just expect volatility. And for me personally, I have set aside like quite a bit of cash on the sideline
Right.
because I expect like volatility.
Yes, so we can immediately see that you're not a gambler, Dejan. I mean,
No.
TSMC exposure is very, very reasonable. It's the by far probably least volatile. I haven't seen the chart, but I can imagine that's the Broadcom. I think actually at one point I was also like chatting with Claude, and although there were clear indications that it's not very clear that we're close to the bottom. I was asking, hey, Claude, what should I buy from semis? And he was telling me Broadcom, but I assume that the TSMC is something similar. So they probably did not suffer much. And but you also had Lenovo, right?
Yeah.
Okay, good. Then, Nitin, what do you have to say on this thing?
I don't think he's wrong at all, and I mean kind of agree with most things. Well, I guess all of them, to be honest. Like the bullwhip effect, I guess I completely agree with that because I think a lot of the EPC companies are obviously overvalued, and those will probably be the ones which get impacted first. And a lot of the revenue that they have will eventually only be service revenue when the new build out stops, and those margins are probably not as great as as what I think though for the memory, I'm not entirely sure because I mean Andy probably has much more knowledge than I do about these things,
Uh-huh.
but I feel like the memory stocks may like I think the next so I'm not into the memory stocks directly myself. I kind of like tweeted something like back in August, but never got into it, like back in August last year, but never got into it. But I think now with the pricing coming down as much as it has, I feel like the next leg, if it does happen, probably would be like margin expansion possibly. Because like not margin expansion, sorry, multiple expansion. I feel because I don't know why I said margin expansion. Sorry, I meant multiple
Yeah.
expansion. So I think
Yeah.
Yes,
I think
we
yeah
understood. I mean,
yeah. Sorry,
Yeah.
I think the biggest
Can I just
yes
add one thing?
yes
So the EPC company you mentioned, like
yes
operate on a very tight
yeah
margin and it's
yes.
very working capital heavy. So like what happens if you like the building time goes from like 3 years to 4 years? Will they be undergo like severe pressure?
Yeah, no, for sure. That's definitely true, and that's the so like the other thing that I would mention is Meta, Microsoft, Google, all of them basically mentioned that the money that they were spending the last 2 years, 3 years, and even like next 2 years, because they were saying the lead time for making those buildings to like come to work is about 2 to 3 years right now. So that capex that they have for the next 2 to 3 years for $200 billion, about 30 to 35% is for the construction of the buildings themselves, and then 60 to 70% is for the networking equipment, the servers and the racks and everything else. So and they also said that we don't spend that money if we don't need to. So basically that decision, they were saying at least, is made 3 months before, based on the demand. So like if they have visibility into demand for November, they'll make that decision today and put that networking equipment there. So basically, that is a capex that they can stop. And as you said, if that stops, then the whole supply chain just comes crumbling down because the multiples, even on the networking side, are pretty high. And as soon as there's even any inklings of spend going down, those names are going to drop massively. But on the EPC side, like that construction will probably stop first because you have a building that you might have to finish, but then after that, you're probably not going to have new buildings coming up. And those comps for like excuse me, like Comfort Systems and like all these other companies, they are like gonna get progressively harder. They're doing well this year, but like if the capex stops in the next 2 3 years, that's gonna look really really hard for them because that construction is completely going to stop. With networking equipment, we can talk about the useful life. It's 3 4 6 whatever, but like that money
Yeah.
that's going into the networking equipment, like was going in 2 years ago, last year, even this year, like those servers will have to be replaced at some point. So I think that spending is probably more like the comps will be less harder for those. As soon as they have to replace those previous racks, that spending might just keep on, like, at least if not it goes up year on year, it'll probably be like flat, or like the differential will be lower, because if the cloud growth is there, they will have to replace those servers as they get old. But you're right, like the EPC companies are probably the ones that will be worst hit in this entire ecosystem. I think the racks might be okay, like the companies that go into the rack and things like that. But some of those multiples are crazy as well. So the multiple compression is going to be crazy because it's pricing in years of growth. For memory, I don't have any memory stocks. I don't plan to buy any memory stocks, but I think if people are invested in the memory stocks, I think saving grace is probably going to be multiple expansion, because if the spending is consistent over the next few years, even if it doesn't go like if it doesn't go down like massively, then those multiples look good, and then those cash flows probably are more secure. And with the LTAs, they might have because the biggest thing with memory is like we don't know when the cliff is. So if they have
Yeah.
good
Yeah.
LTAs, non-fungible, and they know the cash flows are kind of secured, I think the multiples
Yeah.
could go up. But I will say that that trade is extremely crowded all over the place. Like people who
Yes.
have no business being in the
Yes.
stock market are long Micron and things
Yeah.
like
That's
that.
Yeah.
what
So
I
that's
also wanted to
Yeah.
say. I
yeah,
mean, I see a lot of guys on Twitter, on X, that are just long memory stocks, and that they're up like crazy amount of percentage. And I think this trade is like the very, very crowded one. And I think that's
Yeah.
also why we see so much volatility, because it's an obvious trade. Everyone is talking about that. And what I also think is important for this trade is that everyone is saying that the P's are low. I mean, I'm very much irritated when I hear about P's are low, because this is completely like irrelevant in some cases, because the lowest multiple you would see at the top, you never see the low multiples at the bottom, and or I mean, so I'm a bit I think there might be some upside, but again, it's not worth it from the volatility point of view. And the easy money was made. This is the point. And I don't care if memory would go, I don't know, 20, 30, 40, 50%, you name it, due to multiple expansion. But I think the volatility underway would be not worth. I mean, there are some companies that I see that maybe they have a lot of potential, but they have the volatility that I just don't want in my portfolio. And that's why I'm also more with Andy, that is saying, yeah, TSMC is the right choice to have exposure
Yeah.
to this theme, and with low vola, and yeah,
Yeah.
good.
I would say, Nitin, uh, say that, margin expansion, but then he quickly correct himself on, like, he's supposed to say multiple expansion, because the margin for memory stocks is like 85%, just crazy
Yes,
high, just
crazy.
impossible. Like impossible to maintain. And also the visibility, they say, is like 2029, but like what happened like 2030 and afterwards, like nobody knows. So
Exactly,
like, yeah, yeah,
if I was the customer of Micron or Hynix, I mean, I would do anything to prevent what happened during these years, because it is just a ripoff. And I understand what led to that and why. And they were also complaining that Apple did the same when they some time ago, when there was overcapacity, so they were taking lowest price and basically leaving them unprofitable. So now it's more of a payback time. But still, I mean, if I were the customer like Apple, dependent on the memory manufacturer like Micron or whatever, I would do anything that this situation does not happen again. So
yeah,
that's again my point, that I think they're fine for the next 3 years, but the question is what happens after that. And I
yeah,
think that's also what market is concentrating on, because they understand you would have hyper extra super profits for the next 3 years, and then boom, nothing.
Oh, and also another thing is, right. So the AI trade is like memories, EPC, like liquid cooling, power generation, power supply. Like it's like every single stage of the supply chain, and just you don't make sense. Like especially, okay, network equipment maybe, but something like optics is like 3 years down the road, and
Yeah.
people already like reflect that demand, like multiple years down the road. So I think just very very irrational, I would say. Yeah.
Hmm. Good.
Yeah, I guess I'm only in the two AI trades, which are the biggest part of my AI trade portfolio. One is Penguin Solutions. I really like them for their CXL servers and stuff like that. I think that's probably a big part of it, and also the on-prem that they have, that like the on-prem cloud. Because like if the commute goes up, because I'm seeing this like personally quite a bit. The adoption is insane. So yeah, so basically what I was saying was like the adoption is pretty high. So and Penguin Solutions is trading at like 10 times earnings last year. So like next year, sorry. So that's probably a big part of it for me. And the other one that I'm in is called Viavi Solutions, and they have it's a testing, optical testing, and just like data center testing company. And they're also at like 16 times earnings, and they have about $400 million of losses from prior years. So they're not going to pay taxes for a long time, and they also have 50% incremental margins on any of the revenue that they generate from here on out. So like the two names that I'm in like are pretty much like not high like high multiple high growth companies. I just
Yeah, yeah,
like the valuations, and I feel like they're probably going to be more um like they won't have any impacts if this whole thing, or they should have obviously, because like everything will go down. But I think it's just like margin of safety is a little higher, and risk reward seems good to me. But yeah, I'm a little bit more degen, I guess, compared to you guys. So the
How
degen, I
many
guess.
stocks do
So
you
like
have, Nitin?
yeah. Sorry, go.
Nitin, how many stocks do you have overall? You said two from the AI complex.
Yes, and I do have some some power semis as well. Those are like I have those are like options as lasting January 2028. So I do feel at some point, if we do get that's like an option on the portfolio basically for me. If we do get another FOMO sort of a situation, then those will go up massively. It's like almost an option on the entire portfolio because it's like only 3 or 4% of the entire portfolio. So I have these like different buckets. Like most of my portfolio is pretty much like not high risk, but then there's like little options in the portfolio. If they do end up doing well, then they'll land alpha. So
Okay, great. What do we have as the most important news last week? One was certainly the blow up of situational awareness. I'm not a big fan of Buffett and Munger because I see on FinTwit there is a lot of different types. I mean, you can divide them into types, and one is certainly the big bucket is the Buffett and Munger quote guys. And but I think in this case there is a great Munger quote that says that he's seen smart men go broke in three ways. And one is liquor, one is ladies, and one is leverage. So, I mean, I don't know what he was expecting trading 4 times leverage, because this is insane. And he's for sure a smart guy, no question. He knows the industry. He's gonna marry the open AI girl, and he has exposure to all the information. But trading with 4 times leverage on the volatile stocks, I mean, this could not end differently. And it's also reminding me, you probably seen the guy on FinTwit that was also like 27 million at the top. He has in his bio, he has Yukon fanboy. Do you know the guy? And he was 27 million at the top, and then he went to 3 million or something like this. And when I see something like this, I understand how it works. The chemistry in your brain is just broken. You're just that's why I always say that it's not really good to make a lot of money very quickly, because you're just broken inside. You want more and more and more, and I think that's what happened to him, because you have to be crazy to do something like this. I don't know what you guys think.
He's 25, by the way.
Yeah, yeah, yeah. That explains probably a lot of it, but still, yeah, I don't know.
yeah, I saw that account that you're talking about as well, Dimitri. I think he went
Mhm.
up to 4.2 million earlier this week when that whole thing happened, and then I think he went down again on Friday or something like that. So
But I think, I mean, what I noticed is that it's very good that you have these reasonable accounts in your FinTwit timeline. Like the guy that I reposted several times called Moody, and he was also the one that picked up Sivers, I don't know, the Swedish laser manufacturer that Serenity pushed as a bottleneck, and that went up like 30 times before after then falling like 70% or whatever. But it's very important that your timeline is not consisting of this thing, because then you just feel this fear of missing out, that you're doing something wrong and that everyone is getting so rich, and it's just so bad. I mean, there are tons of ways to make money, and the most important thing is consistency, and the most important thing is that you don't that you invest in your own style, and so I think this is the most important thing that I value. And I also try, in the end of May, I also wrote a post that, guys, take some chips off the table and be a little bit more reasonable. I don't know. At least I'm willing to see that maybe I prevented at least the one person from blowing up. So yeah, but it's just this very old tale that is happening over and over again, and it will happen over and over again. Okay, who wants to say about Warsh, about inflation? Andy, I know that you have something to say.
Okay, so I don't think like US will continue to have a high interest rate, because if you look at for the past 5 years, okay, the growth of debt, national debt, outpace the growth of economic growth. So I just don't think that interest rate would maintain at this level. It will come down eventually. And also, isn't the interest expense like is over $1 trillion every year now? So the total debt is like 35, 36 trillion. So I just don't think interest rate will be at this level.
Okay, Nitin?
I agree with them. I agree with Andy. I don't think there's any reason for or any possibility where the interest rate remains this high, because otherwise we're heading towards really bad times. Because everybody is levered to the gills, and also I think there's a lot of the political agenda that kind of comes into the positioning as well. It has always been that case for the last few years. Whenever like things start to go to a place where it could lead to like a huge contagion, someone or something like some political parties or like some people just step in and like stop it from happening. It's just become so, like, if it does keep on rising, then we are heading for times where it becomes like really really bad, because like everything, because as Andy mentioned, that the national debt is so high that they just cannot sustain the interest that's going to be payable technically on that debt for at those rates. So
But uh, I think you're kind of saying that it will be very bad. That's why it cannot happen. But the thing is that if you remember what happened when the Trump was elected and why he was elected, and what did he do in the beginning and what came out of it. I mean, do you remember those 3%, 3%, 3%? They said they will cut the deficit. Never happened. Deficit is very high. Then they said 3% growth. The growth is slowing. I mean, he didn't solve any of the problem. And sorry, you can say that the national debt is high, but I don't see the way how it will not kind of go in this direction. And that's why, uh, you know, everyone, not everyone, but few people were blaming Kenny G that they released this paper about that the Fed will hike, not keeping the rates stable, but will hike. And everyone blamed that he was kind of having his own agenda and pushing Leo into liquidation because of this, that the market went down. And so, I mean, no, I think he was right. I mean, what Warsh should have done, he should have made this hike. And the market, if you look at 30 years, how they reacted, I think this is the biggest problem that we have, and that I don't see that anyone is trying to really work on. And because if you start with cutting deficits, then the economy will stagnate. Everyone would feel, and no one will. The Republicans will not win the midterms. So it's just a kicking the can down the road for forever. And I don't see how it can end differently than the blow up, that the huge inflation and so on, because no one seems to be doing anything about that. And
Well,
I
I
just
agree with you.
we,
I'm not saying
Mhm.
that it's not going to happen. I was just saying that it might not happen until the next, under like in this short time frame that you're thinking, because obviously
Yeah,
we need to
we
have.
all hope for that.
Yeah, yeah. No, I'm not questioning what you're saying in terms of it. It's wrong or it's right. I'm not saying this. I'm just trying to play
Yeah.
it out of how it should, like how it will work out. Is what I'm saying.
Yeah, I have no idea how this work out, but I just see that this trajectory, it's not changing at all. I mean, they kind of said, yeah, we will fix that. We will grow out of that. What Besant? Where is Besant, by the way? I haven't seen him for a while now. I don't know. Maybe he retired already, but he was so present before. But now I haven't seen him for a while because everything he said is just pure. I mean, it was crap. And so that's actually why I think it makes sense to be invested in stocks. And specifically, I think that's also was the reason behind the AI trade, because there you know that there's growth and there's huge growth. It was just the positioning that was so huge, and everyone was so into this trade. So yeah, so the momentum was a bit unsustainable. Okay, shall we talk about performance? Because I think that's somehow everyone was posting performance charts before, but I haven't seen them for a while. Because that's also when we last time we spoke with Nitin, I said don't mention performance. Performance is irrelevant, and it is just creating unnecessary FOMO. And I'm against that, because the most important thing is consistency, that you have your own style that you feel comfortable with, and it doesn't matter if something is flying. There's always like a bull market somewhere, and the main thing is that you always find the ideas that would generate the return that and volatility that is bearable for you. And how do I will start from myself. As I said, I did not have too much of exposure, but I also somehow was exposed through Planoptic and Tasma, which is the semiconductor equipment manufacturer. And I mean, this time it was not that bad, because I came through this in 21, because 2020 was a very similar times, because everyone was making tons of money, everything was flying, it was so easy. Everyone decided that this is a very, very easy game. And then in 21, many suffered, and I suffered the same. So I was a bit more prepared this time. But generally, what I learned myself, it's important that when you open your account, that you don't feel the pain watching at this, because it destroys your the chemistry in your brain. It destroys your any happiness in life. So what I do, if I see that I'm overexposed, that I'm losing too much money, I just cut the risk, concentrate on the positions that are long term, and that I believe that I know a little bit more about them than the market. And this is what I do, because there are different ways of approaching that. If you're not too leveraged and your portfolio is not too volatile, then you just forget about it. You don't look there. Some people sell it all. And so, Andy, what do you do?
Well, I mean, my if you guys follow my Twitter, my bread and
Yes, we
butter
do.
approach. Yeah, my bread and butter approach is mission critical industrial
Yes.
companies, ideally with like high recurring revenue. So for the
Right.
most time, like they don't really move. Like so I am able to stay like very calm, like very peaceful during the volatile times. But uh, yeah, so I just normally have patience, but that just because of the result of my portfolio construction. And then secondly, I like to like do like preventive things beforehand. So like for example, I constantly engage with my normie friends to see what's your take now? Like what do you do? And then I always talk to my brokers, multiple brokers, and say like the like any of your clients use like leverage, like how's their margins? Like did you have to make like margin calls, et cetera, et cetera. So try to gauge the situation beforehand. So that's pretty much it. So and then obviously one way to kind of like manage risk is that I always think about because for my approach the biggest risk is technical obsolescence. So say if there's a replacement like a alternative supply chain solution, then this company will be cooked. So I always try to think if I have this risk and trying to add before it happens. Yes.
Hmm. Nitin?
I was doing really well until obviously a couple months ago, and even now, like even after the drawdown, I think I'm pretty happy with where I am. Honestly, generally, what I do is, as you said, Dimitri, I think I learned this from you. Basically, I think you had this conversation like a while back that you just cut
Right.
the risk when you are kind of like seeing the signs. So I was doing like actually like almost halfway through this drawdown, I was actually doing really well. I think it was only down like 12 or 13% from the top. Reason being, I
Wow.
was picking like Take Two and Peng, which actually had which had pretty good in term like relative strength. And then eventually there was a couple of like news that came out with like Kimi K3 release. There was a talk about KDA and how that will like impact CXL, which is I believe is completely BS. And then they had like a big margin swap, which was also pretty bullish for them. The stock just dropped because everything dropped. I think it's just like as Andy mentioned, there's a lot of interdependencies between these stocks as well. So people are just selling stuff to like you know like just basically get out. So at that point, everything and anything just starts to sell off. So then that led to the second leg, which was kind of a painful experience, but still kind of up almost like 35% this year, which is not bad to be honest, given how things have been over the last 3 or 4 weeks. So I managed just that way. The one thing that I said last time, and I was just trying to go back and like trying to reverse engineer what my mistakes were. And I think every time, last 3 times, when like in November, in February, and even now, what has happened has been my thinking. Like, so what happens is I start pretty concentrated before a leg because I do a lot of like technical analysis as well. And then eventually, when markets start to do really well, I do end up having some sort of FOMO. I've noticed this about myself, and I actually noticed that. Just wrote this down. Dimitri, that you said, prune your list that you're following, because a lot of the people that when the market is going up, everything works, so then they're gaining a lot of like following and things
Right.
like that, and then you're just like, man, this guy is so good. And then you just like sometimes you just like kind of, or at least for me, I need to fix this. I guess I'm like quote unquote like less experienced than you guys, only 28 right now, so like I still
Oh,
have a
okay.
lot of mistakes that I make, I guess. So I'm just learning those things. So next, after this podcast, definitely gonna go and see who all I follow, and going to like unfollow some people that I should not be following, because as you said, it's a echo chamber that happens, and you're just like following the same people, same thoughts, and then you are like, man,
Right.
this guy's up 400% this year, this guy's up 300%, what am I doing wrong?
Yeah.
And then you just start going like a little bit forward on the risk curve. And then when these things happen, then so like in March I had made some really strict rules for myself, which I was following for like April and half of May, and I was doing really well. And then as soon as I strayed away from them, like just got hurt, I guess, a little bit. So yeah, so like for the drawdowns itself, I think for me generally this one was like sort of more painful than the others, not just percentage wise, just because of my own personal things. I'm like I should have handled it better than I did. So that was the biggest thing for me mentally. But obviously, every time this has happened, I've kind of built systems around it and tried to make myself better. So I'm just gonna do that this time around as well. Try to like not listen to other people and just like just stick to my principles and stick to the rubric that I made in the beginning of this whole rally in February, March. I was kind of working on a specific rubric as to how I'm going to invest in stocks, and it was like a 190-point scale type of thing, just like a checklist sort of. So I was following it, and I was doing well. And then as soon as I stray away from something like that, it ends up impacting me. So as every as every drawdown is, learned a lot. I'm not going to try to not repeat these mistakes again, I guess.
So the second part is all about pitches, the stocks that is worth looking at. Then Enzi, your turn. Tell us, what do you recommend? What do you think worth looking at, and why?
Not a investment advice, obviously, but I like Tencent. Okay, so Tencent, like the case is straightforward. Okay, so the active user, daily user is 1.4 billion. So that's like 75% of active internet users. And then the average time they spend is 80 minutes per day. So I mean, and then just crazy. And you just get way to everything, like very comprehensive data, very strong and robust ecosystem. So that's a thing called mini program, mini app. So what it does is that it's just like a app store. So you don't have to go to like Apple App Store to download apps. You can just use WeChat, and then you can like call a taxi, book a flight, and book like takeaway food, like pay your bills and play games, whatever. You can do a lot of things, and then just crazy. It's crazy than like 15 times of like next year's earning. So it's not complicated. It's easy. It's pretty straightforward. So that's number
Uh,
one.
uh, yes, I want. I mean, I don't own Chinese stocks. Basically, I
Good
stated
choice.
that's because last time Nitin wrote me about Silicon. How's it? Simo. And I said, I don't invest in Chinese stocks. And he told me immediately, how about Hymax? Yeah, I just wanted to, because Hymax was it was a bit special case because I built my screener that I use, and then I kind of also sent some guys so that they check it out. And then Hymax was kind of entering the screen week one, and and then Nipun writes me, "Hey, I see that Hymax's number is entering the screen, and by the way, here's the thesis that he afterwards gave to that he spoke to Citrini and to Hunter Brook, and then I'm working out next day." And I bought it, and I said, "Wow, this is fascinating." I'm working out, and next day, I see that the Hymax is up 40% pre-market. So it was just a rather an accident that I bought this. But I just what I wanted to say about the Chinese stocks. I'm from Latvia, that is close to Russia, and
Yes.
I never invested in Russian stocks because you don't own anything in Russia. Because there is a KGB guy comes to you one day and say, "Hey, your assets are mine." Uh, I think the main issue with Tencent for me is what happens if there is a one Chinese KGB guy coming to you and say, "Hey, I mean, what do you own really?" I think this is the main problem that I see with all assets that are somehow outside the States or Europe. So, how would you oppose to that?
I would say, uh, I would say, there's a discount, but if there's like a KGB style takeover, state censorship. Maybe that's too far. Maybe that's way too far.
Yeah.
Because because I mean, like if you go to like Hong Kong, like Shenzhen, Shanghai, Beijing, like it's pretty much a full function economy. I mean, they're
Hmm.
not like still like dictatorship and communist system. I agree with that, but overall, it's still largely a very functioning economy, right? And then like with WeChat, like it has like more functionality than like WhatsApp, Facebook, also
I
like
totally
Western app.
agree. I think it's a
Yeah,
fabulous ecosystem that is a role model for everyone, basically. I mean, I think everyone is trying to replicate it in many countries and not succeeding, basically.
uh-huh. Yes. Yeah. So I mean, I would say, okay. So the other way to answer your question, I would say, CCP is more interested in controlling like energy, like banking, Baijiu, and something related to like national safety, for example, the food safety, right? The food security, like defense, like weapon system, that kind of things. Like for like a social for social app, like a super app, maybe it's like out of the interest, I would say, but at least not like the top of priority, I would say.
Yeah, that is true. But I mean, I'm also not. I mean, we had this case with Jack Ma, right, and
Yeah.
Alibaba.
Yes.
So
Yes.
it's
Yes.
not also something. It's not. It doesn't have to be a guy with a machine gun from KGB or whatever. It can also be influence. Yeah, from any other side. I mean, you know what I mean. But you say there is a discount, and that is basically reflected in evaluation, and right.
The other thing is, okay, so I actually invested in Lenovo this year, and it went up 200%. And then because like people like figured out, oh, it's making AI servers. So and just that they're going to be good assets. I'm not going to say it's totally risk free, like totally like there's no like KGB take over risk. No, it's not going to happen. But it just still it all comes down to like the risk reward. Like are you
Right,
willing
right.
to accept that risk reward? Yeah.
I mean, we have people that are gambling fart coins. I mean, what are we talking about, right? That's
Yeah,
not even
exactly.
close.
And quick question only. I know, like, there was something about it yesterday where they were saying Alibaba is like the cloud provider for Kimi K3. Is there something like that? Are there a cloud provider as well for like AI? Like, could that lead to multiple expansion, you think? Like, is there a story there too for Tencent or?
uh as far as I know, cloud is like capital intensive. Like at least that's the business model in China. So like Tencent is not interested in like cloud provider, that kind of thing. No. But I would say it's more they're more interested in like level that AI capability into like gaming, ad tech, fintech, that kind of things, instead of like building a huge important all-encompassing infrastructure and then like invite every LLM to use their infrastructure. No, that's not what they want to do. No.
Oh, okay, I was just asking maybe if there's like a multiple expansion story there somewhere, but that's okay. I just was wondering if there is anything.
I hope so. Literally, maybe. Yeah.
Great. And the other one is actually quite interesting because I think it's exposed to one of the big trend, which is looks maxing, and overall that people want to be A, healthy, B, beautiful, and
Yeah. Exactly.
live longer and longevity. And this is the thing that I'm very much I like because it's just a structural winner, and you see it all in the data because everything is so that is exposed to the theme is doing very well. And in consumer businesses, which I as I said multiple times, I really hate because they're also volatile shitcoins, most of the, but there are few things that are really secular, long-term, good assets that are exposed to the theme. Can you maybe tell about that?
Okay, so the Korean Botox manufacturer Hugel. So Hugel, I mean, I'm really excited to talk about this stuff. Like especially with you guys. Okay, so it's a oligopoly. There are maybe like 6 or 7 manufacturers in the world that can make Botox, and the growth is just phenomenal. Like if you look at past 5 years, the CAGR revenue is like 16%, something like that, and then the margin is like 80%, and they are making like strong growth in US and just strong growth overall. So and then just Botox is very low risk. So the worst thing you can get is that your face gets stiffened for like a month or two, and then you'll be
Which is also
fine.
not
So
kind of very cool thing, but still.
no. I mean, so it's very low risk. So let's
Uh-huh.
say if the alternative is like a radio frequency treatment. Okay, so first of all, like RF treatment is painful, and then secondly, it's expensive, and then just so and then maybe there's some kind of like side effects, and you don't really know like if it's working or not. But with Botox, it's like test and proven, and then like it's very affordable, at least in Korea. So for like crow's feet, it's like I think it's like $60, something like that, and for like this part of your face is like 160, so very affordable. And then, obviously, through recurring, right? So you have to inject it like maybe like every 4 months or something like that. So, uh, yeah, terrific business. And then because, it's a anti-AI trade, right? Because all of Korea, memory stocks suck up all the
Right.
capitals. And then it just felt like,
You had a lot of money
28%.
to spend on yourself.
Yeah, exactly. That too. But like it trapped, it sucked away all the capital, and it just fell down like 28% for no reason. So yeah,
Mhm. Yeah, I think Korea, in a way, is a very like a forward-looking indicator. I mean, like a leading indicator for the whole world, because
yeah,
one part due to the low birth rate.
yeah.
B, I mean, you see how Hallyu, this Korean wave, is so popular, and also, I mean, I'm a big fan of one Korean film director, Kim Ki-duk, and
Oh,
he
okay.
had the do you know them?
Is it a director of Parasite?
No, the other
Oh,
one.
okay, okay. Oh, the other one. Okay.
He had a movie because in Korea, plastic surgery is very popular, as in
Yeah,
general, and there
yeah,
was a movie about the girl who was afraid that her partner, he will lose interest in her because and she kind of remade her face completely, and
yeah,
generally the density of plastic surgery in Korea is like enormous because everyone
yeah,
is now, there are ears from else is now popular, and then there was also nose, so people are modifying themselves a lot, and I think that's also the you can laugh, of course, but I think that's also, it's really like a leading indicator for the world, and I think the adoption of plastic surgery for all these
yeah.
looks maxing is just the continuation of this trend. So I totally, it's a totally um, valid and interesting trade for in the secular trends, and the I
And
have. Mhm.
can I make like two more points? So
Yes,
like first point, this is like K-pop, K-beauty, and so like a beauty standard, the pop culture of Korea is like spreading out. So there's like the soft power. And secondly, I think the largest player is Elegant. So
right.
for Elegant, the therapeutic use of Botox actually exceeding the aesthetic use. So you can use it for like chronic headache, uh like overreactive bladder. So that could be another application.
Right. I also heard that you are going to South Korea soon, right?
Oh yeah, next month. Yeah.
How about a little field research?
Yeah. Because apparently, most of the cosmetic plastic surgeon clinic is in Gangnam. You know,
Hmm.
the Song Gangnam style is in that area. And then I was there last time, and then I see like a woman was in like bondage, just walking on the street. Like it's like very shocking, very shocking.
Yeah.
Yeah.
Good, good. Thanks, Andy. Then,
Okay.
yeah, was pleasure talking to you.
Okay.
Have a nice
Thank you.
sleep.
Thank
I
you.
know it's late.
Yeah.
Thank you.
Okay. Talk to you
Thanks again.
later.
Thank you.
Take
Bye
care.
bye. Nitin? Maybe I first talk about. I actually I also don't have a lot of new ideas because somehow I still want to talk about Peloton. I don't know whether you bought it or not.
I do have some shares. Yeah.
Okay. Because I think that I was tracking a little bit their LinkedIn hiring for Precor and for Peloton, and I think the key thing that I think makes the company interesting is that everyone is still thinking of it like a COVID beneficiary, like a bike connected to the live class, which is, I think, not really the case if you understand and see what their strategy is. I think they're doing a lot of things to, first of all, there are more modalities because there is bike, there is tread, but there is also strength. And I think I see a lot of popularity for strength training. And I think they would sooner or later release some sort of hardware. I don't know when this will happen, but I think it will happen. But I think what is important to understand is that they want to cover gyms and they also want to have this recurring layer, and this is very important because during COVID it made sense to concentrate on the home fitness and connected home fitness, and you had a lot of pull forward demand that kind of caused the multiple year overhang and normalization. And now I think they're really trying to become a connected wellness company, and offer anywhere in the world, because so far there are very few language classes. There are some German and Spanish, but they are hiring now the guys who will work about the translating this whole thing with AI into any language. They also want for people that are not don't have the money to buy bike or tread at home, that they can do it in the gym and pay, let's say, a surcharge for taking classes in the gym. And I think many people just underestimating what this company is trying to become. And this, I think, will cause a re-raising sooner or later because so far it's like a melting cube and everyone is treating it like a melting cube. But I think because I also used to have Technogym, and that basically collapsed. And technology, what any sports equipment manufacturer is lacking is this engagement that I already spoke before. This really engagement and motivation behind that technology, for example, has, and this uh, access to customer, which is important. And I think Peloton is leveraging their biggest kind of competitive advantage to all the guys that are doing fitness. And I think this is what makes them very, very interesting, because there are not that many assets in the field. I mean, I already maybe mentioned, or at least I've written in Twitter about Lifetime, the premium luxury kind of gym and spa, and just a wellness company. And last time I also pitched the Lindblad, which I, by the way, sold because it also ran a little bit, and I see that it's a little bit extended. Um, but generally, there are not that many assets that are exposed to this topic: the wellness, fitness, things that make you feel good, that have the really the value to you as a customer, and has the differentiation layer relative to the rest. And that's why I think what makes Peloton very, very interesting assets. Um, that's why, I mean, they report next week, and Peloton is my largest position. I like it again as a company very much. I like the assets that are exposed to longevity, to health, and things that make you feel good. So that's, and I think I just, what I seen in LinkedIn is that they are really, really investing a lot into organization, and they are making it AI first, whatever that means. But still, there is a lot that you can improve if you do it the right way. And I think the only my biggest fear is that this popularity of strength training. I think this is important because there is a lot of people on GLP-1, and now there is a plenty of studies saying that strength training, if you really want to live a long and healthy life, you should lift weights, and this is really important for you. And plus the GLP-1, obviously, because now I see one of the companies that I owned before is Basic Fit, which is the largest discount gym operator in the Europe. They're also doing very well, and basically everyone is saying that before it was 70% cardio and 30% strength, and now it's 50-50. So the guys like Technogym, which are mostly making money with bikes and treads, they would also suffer. But and also obviously Peloton is more about the bikes and treads, but still I think there are 2 million people that are using already strength. And I think they also, if the guys like Technogym, they have a lag due to this shift, then Peloton already feels this shift to strength, because people would probably switch from bikes to more lifting weights. So I think this is the only big thing that they should address. But otherwise, I really like this company.
That's
Yeah.
really,
Do you want to
thanks for
say something about Reddit?
yeah, I have actually a lot of things to say.
Great.
So basically, I
Because
am
again, when I wrote the post,
yeah,
uh, that I also bought after we talked, and
yes,
we spoke about the company before, and
yeah,
I already bought before, then sold it because I didn't like the volatility, and then I also bought, and I made some nice money, and I sold
yeah,
it when I remember when I wrote you, and I was
yes,
very
you did,
lucky.
yeah,
So and
nice,
so I was not into this drop that happened.
yeah,
Then
for sure. No,
yes,
actually, I just like I think I've shared this with you, and I need to figure this out for myself because sometimes what happens is I felt like a company, and like I was doing this a lot. So basically, what I would do is like I would try to find an entry for it, and then once so once I get the entry, I'm not able to get and I get out for a small loss or a small profit. If I do it a couple times and it's not working for me, I just leave the stock alone and like
yeah,
leave the patience of like not playing it
yes,
with again. And I've been trying to change this for myself because my universe of equities that I like right now, specifically with the valuation, has gotten smaller and smaller. So I had to like change my style a little bit, but obviously that didn't work out in terms of price action. But I actually was like I think like was writing a post, quite a long post, but I think I'm not going to write it. I'm just going to talk about it here. So
hmm
I think there's a lot of misunderstanding by the retail here about Reddit as well as I feel like the analysts and everybody. I'm a super user, so I think I have a very good authority to like speak about the company and like what I'm seeing. So first of all, I'd say some people are comparing this with Duolingo, and that is downright dumb in my opinion. You cannot compare Reddit with Duolingo and what happened to Duolingo. So
Yeah,
I don't
I
even.
seen it also on on FinTwit, and I know what you're
Yeah,
talking
I'm
about.
like, it's insane how bad some takes are on FinTwit, and those accounts are rather large. So that's what I would say first. And the other thing that I'll say is there's a lot of things, I guess. So basically, I was listening to the earnings calls. I've listened to the earnings call twice, trying to like game theorize how this plays out for them. Obviously, it might not play out the way I'm going to say it's going to play out, but this is few quotes that the CEO said, and based on like other information, I feel like this is how it might play out for Reddit over the next 12 months. So
Hmm.
basically, the thing is, first of all, like a lot of these AI systems, a lot of the LLMs, the way they're going to monetize themselves is going to be through agentic commerce. And I was reading some posts and stuff where it said Reddit was 18. Some people were saying 18% of all citations, and some are saying
Right.
41%. So if we
It
take,
depends
if
on
we
the LLM, on different, because
on
I
the
think it
LLM
was
as
very
yeah,
heavy on Gemini and
yes.
Tropic, OpenAI. I'm not sure. Yeah.
Yeah, I think Perplexity is like at 18%, and then I think all the other ones you mentioned are pretty high. And so if we take those things together, the agentic commerce that does happen eventually, and already how much Reddit is embedded into the LLMs, the value of Reddit is going to explode. The reason being, earlier, the entire monetization was how do we get people to stay on, Google? And how they used to do it was there was a lot of, I don't know if you remember, but there was like, in like internet like 2.0, like 5, 10 years ago, there would be blogs, 10 things like you should buy right now or something like that. And the people who would write those blog posts, as you click on that blog post, you go to Amazon, they would make money. Like the person who's given the
Right.
back traffic to that's how they would used to that's how they used to make money. Now inherently what used to happen with those posts were people would push products which would be higher percentage, like the higher percentage commission. So the importance and so the importance of those types of posts have gone down to zero now, and everybody just looks at the AI overview, and that's basically what they're looking at. Not everybody, but like some people want the deep conversation. So so if we use that, then we can say that the value of Reddit is very important, because the brand content that brands are creating obviously is going to say their product is better than everybody else. Then these blog posts are also self-centered around the fact that they want to sell something that they get most commission from. So that's why if you do, and Reddit said that 40% of queries that are on Reddit's platform itself are commercial inquiries of some sort. People looking for shoes, people looking for baby products, people looking for all these things. So it's probably the best place to have all these reviews kind of in a certain in an environment. So just that alone makes me think that if LLMs are going to, if we are going towards agentic commerce, if we are saying AI overviews are stopping me from going to Reddit, that inherently tells you how important Reddit's data is and Reddit's conversations are. So that's where I would say is like the first thing where people are saying Google has all the leverage, or like the LLMs have all the leverage. They actually don't. And another thing about Reddit is all the data that's on there is text based, and LLMs need text to get trained. So you can't scrape through TikTok, you can't scrape through Instagram. Like that's such a wide amount of data to look through. This is data efficient as well. So Reddit, I think that's the number one value for me, at least, where it comes from. Now the other concern is around DAUs. That they're saying the DAUs are not growing quarter over quarter, and the main reason for that basically is that, and the CEO said this. They said that over the when the 10 blue links used to happen, we would get a lot of traffic. We get a lot of monetization from it. The ARPU is around $11.50 at this moment. So obviously, like that is very valuable for them. That people come into the Reddit ecosystem, and that's where they, that's where they make their most amount of money. Because right now it's 60 million per year from Google, which adds up to $15 million a quarter. And if we just take out the international audience completely out from this calculation, just for numbers case, we get $15 million of licensing revenue per quarter from Google at the moment. 53 million users that are in the US. So you divide that and you get around zero point 0.3 cent per user that you're getting. Like a comparison between if that same customer was to go from from AI overviews to the platform, the difference is almost what, like 40x, almost 40x difference in monetization. So you could see why they want people to come to their platform and not just get straight away from the AI overview and not get paid enough for it. And the other quote that they mentioned in their earnings call, sorry, I'm like going longer, but I want to like kind of paint the
Yeah,
full
it's okay.
picture. Yeah, the other thing that they mentioned in the call was, we don't want the licensing to be flat rate. So I think what's they didn't say this exactly, but this is what I kind of got from it,
Right.
that we don't want 10 blue links, we don't want a flat rate. So I think what's going to happen is, it's going to be the pre-training data, the training data, that's like old data, that's being prehistoric data, that's probably less valuable to Reddit at this point, is going to be sold. It's probably going to be a deal where it's sold in chunks. So the first chunk will be for that old data, which will be probably sold for a cheaper price. And then the AI overviews. So I think what could potentially happen is, with AI overviews actually giving you the right answer, it's probably going to change from that to say, users discuss this, and this. Some people are saying this, some people are saying that, pro cons type of thing. And then it kind of links you to Reddit. And then at that point, you're kind of not, you're getting the answer, but you're not getting the direct answer. And they specifically mentioned that AI overviews has led to not the same amount of monetization that they were seeing through blue links. So I think this is where they're losing the most amount of money, and this is where they're probably going to charge the most to Gemini. So if the user comes over to Reddit, I think the pricing will be cheaper. And if it stays within, so if they don't agree to integrating Reddit within the AI overviews themselves, then the pricing will be higher. And if they do agree for them to translate over to Reddit, then the pricing will be lower. And the third thing that I think potentially is where it would work out is, the Reddit subreddit itself would be embedded within the AI overview, and you can like upward downward sort of thing, and you can actually like just integrate your Google account with Reddit. So because right now, I think Google's biggest problem with Reddit succeeding is that Reddit has its own AI answers product that they're trying to sell. So if you are if they have this, and if no one comes to Google ever again and just goes to Reddit directly to get those answers, it's a directly competing situation between the two of them. Although it's a very small situation, but also it's still like Google wouldn't want that traffic to go away from them to Reddit completely. So I think there is an interdependency, and I think what will potentially happen is, either Reddit, if AI overviews do not translate over to Reddit, either Reddit will charge more money for those, or the thread itself, the post itself, gets embedded within the AI overview, and you link your account, sort of a thing, with that. And I think that's when, like, so Reddit used to report logged in versus logged out users. They have now completely got rid of that metric, and their whole goal on the call was we want to get to 100 million users within the US. So I think this is how they would reach the 100 million users goal, and they'll be able to monetize it better. And I think there's a possibility. Now, this is might be a wild prediction, but I do think there's a possibility that Google actually ends up buying a stake in Reddit, because if they want to make it work between the two of them, they have to find a solution that works for both of them. And I don't think that people saying that, like, Google can just completely, wipe off Reddit. They can just like, that's not
I
going to
mean,
happen.
there are not
The
too
data is,
many
yeah,
sources of information that you can, and now I don't know, have you seen or not, Cloudflare is offering,
yeah,
and I think
yes,
that's a very big thing, that any website can be, data on any website can be monetized. So basically, if you really want to, if you have the data and you want to sell it, then you have the very good gate how to monetize, because then you can charge for every API call through this gate, and basically I think there would be more and more of these type of deals. So in the end, I think the amount of citation is already uh, the indicator how important it is for all LLMs. Because again, I'm very frustrated. I have directly in my prompt, I say that I don't want to all these junk sources as quoted in my replies. And I think this is the big problem, that and also one of the issues that we have currently, because all free data that we have in the internet is already inside the LLMs. And the next, if you really want to uh, kind of develop further these LLMs, you need really high quality sources. And one of the ways to monetize is really the infrastructure that Cloudflare is providing. And I think this is also one of the options for Reddit. I mean, the key debate, I think, about the Reddit is that you have less logged in was the problem, right? Not logged off.
I think the biggest issue people are saying, so there's two things. One is the DAUs have kind of flatlined. So I think there was this quarter, there was like a little deceleration quarter on quarter. And then the
Mm-hmm.
mention about the traffic being a little volatile towards the end of the quarter was probably the other thing. But yeah, and I looked into it a little bit more. I think it's just basically there was a thing done where like what Reddit was doing was Reddit was using like posts that are done in foreign languages and then just converting them inside in English and like just like geographically. So like say if I was looking for something in Mexico and someone in India had talked about it in Hindi, they would create a page that would turn it into like Mexican, and then like they'll just give them the answer, and that's what they were ranking. I think in 4 or 5% of all AI overviews, if I read correctly. This was like a separate post that I'd found like kind of digging deep last night, and Google stopped ranking those, and then that's why it went from 5% to about 2.5%. So that's why they were seeing this huge this deceleration in AI overviews. And I mean, like for Reddit, if we look at it from their perspective, it's unfair almost because like they're just giving the answer in that AI overview,
I
and
know.
you're like, man, you're just paying me $15 million a quarter. Like that's $5 million a quarter. I can literally make that with like basically nothing in terms of the users that I need to get. Like I need like 500,000 users to make that money. So like it's not fair to them. So and I think that's, as you said, like this is probably going to be the position of like everywhere else as well, like across, because a lot of the people who are creating original content don't have any any need to do this. And then also we'll just have like just like what's the word? I forgot the exact word, but like it just what happens is like AI is going. I think it's called something model collapse. I guess it's called model collapse. If it keeps on training on the same data over and over again, and it just keeps on like there's no new data that's coming in, it just kind of like just hallucinates like crazy. So you need new
Mm-hmm.
data to like figure out how this works. And new data, if there is any place where you can actually get new data these days, is social media, especially if for like things where you're asking for opinions, what movie to watch, things like this. And you can't like, there's no way. Already the memory costs are so high and stuff like that. How is Gemini or ChatGPT going to scrape through TikTok, through millions of videos to find out what suggestion to give to people? So I think Reddit has a pretty interesting niche kind of a platform that I think is going to be super valuable. So yeah, I'm still like I sold a little bit right at post market because I was seeing like I was like, man, this is probably going to get worse because it was just the amount of takes that I was seeing is just insane, and the market gets spooked about everything these days. So, but then I still have my position, and I don't feel like selling. I don't really see anything else that I'm like been getting very excited about, in the sense, and I might change my mind like on Monday, but like, you know what, I'm just gonna get rid of this and like
Oh,
find
I
something
know. Yeah, yeah.
else.
I
So,
know
but
what
yeah.
you're saying, what you're talking about. I have the same because I mean, I see now a lot of um, software companies coming on my screen, and I also traded a few times already. Those I bought and I sold. Then it's basically the opposite of AI trade. And but it is like the moves are so crazy. I'm still and it's kind of important that you mentioned that you have a problem to buying back the company. And I also had this, and I solved this issue. I have no more problem with that. And I because I now I traded several times, and I also said several times for software companies never again, and then I came back because I see that the market is before it was everything was sold and put into this hardware, not the hardware, I mean the AI trade, the physical one, and now I think that we have a little bit the rotation back, and this is I think also an opportunity that I'm trying because there are a lot of companies, like for example Samsara, that I like a lot, that has this physical layer that you cannot replace and that you cannot rip out of your processes. And I see that many companies are now having much better charts and coming into my screen, and that I also trade. I mean, I wrote about several of them. Good. Then thanks. That's for the talk, and hopefully the markets are a bit calmer, and
Yeah.
because it's getting more and more annoyed, because I every day I dump the data that I track to Claude, and then I say, and he said, yeah, we now changed direction like 6 times in the last 2 weeks, because one day it's AI rebound, then next day it's like rate sensitive complex going up, then going down, and it's just very annoying. So
Yeah, lot of
I,
stuff going on right now. I did like the price action on Thursday and also on Friday. This is exactly, if you are an AI bull, like that's exactly what you want to see. Because I think we had that huge gap up day, which is technically where all the moves start. And if I was to predict anything, next 2 weeks probably do another few things where just like we should see not too much volatility. Maybe 3 4 days when we start to go down, and then we get another move up, and then recover those short term EMAs, and then hopefully proceed forward. But that's just hope, I guess, at this point. The price action was really nice. The weekly charts look really good. We had like long wicks right into important EMAs. So that could have been the bottom. And I think I texted you on like Thursday night when I was seeing like the SK Hynix price
yes,
action, or like it was a Wednesday night. I was like, this looks like a bottoming process, because the volume was continuing to
I
go
seen,
up.
yes.
But yeah, but there was like a lot of demand. So hopefully this is the bottom, but we'll see.
Fingers crossed. Okay, thanks, Nitin. Then
Take care.
thanks everyone who listened to this. Yeah, see you next time.
Yes, take care.